I'm just going to record a short video here. I've been watching some YouTube videos about the economy and a potential recession. I think UBS, Union Bank of Switzerland, issued some guidance on consumer sentiment and essentially saying that due to low consumer sentiment, there's a potential recession within the next year. So I guess basically in a short version, due to simply the ebb and flows of the economy. Things are overheated right now, and there needs to be some kind of pullback, some kind of correction. And certainly there has been a bubble with AI and everything like that. The Magnificent Seven stocks, NVIDIA, Facebook, Google, all those ones, I think comprise close to $20 trillion of valuation between them. So that's obviously bubble territory. In terms of longer term trends, beyond just, okay, there's a bubble and there needs to be a correction, over the next 20, 30 years, the birth rate is contracting in Western world, including in the United States. And then, of course, there's racist anti-immigrant policies with the Trump administration wanting to get rid of immigrants of color, not immigrants in general. They want the white, apartheid-supporting South Africans to come here, but they don't want immigrants of color. But most of our immigrants are immigrants of color from Central America and so forth. So leaving the morality of it aside, the sort of white nationalists wanting only white people to be in the United States types of policies of Donald Trump is, for the first time ever, causing a population reduction. I mean, literally the first time ever, going back to 1776 to 2025, through the birth rate and immigration, the population in the United States has always grown, but now it's contracting. Combination of basically more people are dying than being born, and again, the racist policy of people like Donald Trump and his inner circle that are white nationalists, some very openly white nationalists who want only white people to be in the United States, due to discredited kind of neo-Nazi philosophy. People like Stephen Miller, Stephen Bannon, who are very openly neo-Nazi, incidentally. But I don't want to get too, sidetracked with politics of it. Just focusing on the economy, it's not rocket science that the kind of 70s, 80s, 90s were, well, not so much the 70s, there was a little bit of a recession at that time, but certainly the 80s and 90s were boom times for the United States, because the baby boomer generation, people born in the late 40s and 50s, were sort of coming into their prime working years and so forth in the 80s and 90s. So there was a large population, a large educated population, right? So, I mean, it's not really rocket science. If you have a large increasing population, you have an increasing economy. And as Japan found out in the 90s through today, if you have a decreasing population, you're having a decreasing economy, right? So not only in terms of there's a bubble, which there is a bubble, but that would just give you like a correction, probably not as bad as 2008, just kind of a pullback a little bit. Maybe similar to 1979 or something, kind of one of those bubble pullbacks. Or 1992 might be another example of that. But on top of the natural ebb and flows of bubbles, we're having a secular long-term trend. And what's interesting about it is China is also overextended with debt, similar to the United States is. And a lot of people think that China will replace the United States in terms of being dominant. And that might be true for a little while, but even China has problems too, both demographically, lower birth rates, and also with debt. So it has similar problems to the United States, although we're worse because, again, we have this racist anti-immigrant stuff going on. So really, in 20 years' time-ish, give or take, really what's going to be the number one economy in the world is India, right? Because India has a growing population, focused on education. They have their debts under control. So all the things that made America great in terms of an increasing population, an educated population, reasonable fiscal policy. I mean, we've always had deficits, but not to this extent. All those factors, education of women, for example, all those factors that led to America's prosperity in the 20th century are now being applied to India, right? So, the 20s and 30s, 2020s and 2030s, what we're in now is 2025. The next 10 to 15 years, America is going to start to contract with lowering birth rates, lowering immigration, and political turmoil. And then, China might sort of have a moment, but even they also have problems. They're sort of going the way of Japan a little bit. So really what's going to fill the gap, nature abhors a vacuum, is probably India, right? And it'd be a very big global alignment. If you go back a little over 3,000 years ago, there was a similar realignment with the fall of the Bronze Age, that Egypt had been a very dominant power, but because of various wars, it had to kind of contract a little bit, and it withdrew its armies, its garrisons or whatever, away from what is today Israel, and left sort of a power gap there, and that's what allowed the kingdom of Judea to come and flourish, and you have that kingdom there. And of course that leads to Judaism, and that's a whole other story. But the kingdom of Judea and Israel to the north, the two kingdoms, Israel and Judah, probably wouldn't have happened, at least not in the same way, had there not been that power vacuum around 1100-ish BCE with Egypt withdrawing back. So it's going to be a similar realignment with America and then China sort of rising and falling and declining, and then that power vacuum will come in and India will be the next thing. So if you want to invest for 30 years in the future, India, you'll find yourself an ETF that focuses on India. What I really wanted to do, though, with the focus of this video, because those are all subjects that could be their own videos, is kind of say something briefly about gold and Bitcoin, because I see a lot of videos saying, oh yeah, there's going to be a recession for various reasons, some of which I've enumerated, so get into gold, get into Bitcoin. Well, Bitcoin historically is like a NASDAQ stock, right? It goes up when the economy is going up, it goes down during recessionary times. So it's treated as a risk on, not risk off tech stock. So if the equities market is crashing, if we're having another 2008, well, guess what? Bitcoin's going to go down too. It's not a safe haven. And then, as I've talked about before, Bitcoin has a long-term risk with quantum computers. And I'm not going to deep dive that, but basically, if you have a quantum computer with 2,300, say round that up to 2,500 qubits that are error corrected, that can crack the public-private key encryption. So if I send you Bitcoin and a quantum computer can observe me doing that, because everything's public on the network, it can reverse engineer what my private key is, what my password basically is, and then it can have full access to my Bitcoins, right? So as soon as I try to send Bitcoins, I'm exposing my public keys, and then they can use the quantum computer can basically reverse engineer that public key. A lot of people say, oh, well, the public key is hashed. Well, again, when I'm sending the coins, it becomes unhashed because of the Taproot fork of Bitcoin, which really, in retrospect, should have been seen as a mistake. So, again, we could get technical with that, but basically, Bitcoin is vulnerable to quantum computing. And there will be computers within the next 4 or 5 years, provided the economic recession isn't like apocalyptic, but at least at current plans, there's I'm not going to say the name of it because I'm kind of blanking on it. I don't want to say something wrong, but one of these quantum companies is building a big facility in Chicago. They're kind of taking over an old, maybe an old steel plant or one of these old plants that have been shut down, but they're taking that property and they're having a big, huge, several building side, like a city block size quantum computer that will have 1 million qubits. Now, that's the physical qubits, and how many of those will be error corrected versus physical. What's that ratio? I don't know, but conservatively it might be 100 to 1. So if they have 1 million physical qubits, and that might correspond with the math to, say, 10,000 error corrected qubits. But it'll be several times more error corrected qubits as is needed to crack Bitcoin, right? So, and that will be online, that will exist in 4 or 5 years. There is such a thing as corporate espionage, if we can do it here in the United States, and China can figure it out and so forth. So Bitcoin is on borrowed time, and I've talked about this before. So In the short term, Bitcoin goes up and down like any other tech stock, but long term, Bitcoin just doesn't really have a future, I don't think, because of that quantum thing. They really need to start over, and they don't want to start over because they're making money now, and they're not all of them, but most Bitcoin developers and influencers are essentially scammers that want to make money in the short term, and they don't care about building for the long term. So I don't think Bitcoin's going to do much to improve it, and they'll have to essentially have a reset. Bitcoin will essentially go to zero, and they'll have to, come up with another cryptocurrency that is more resistant to quantum computing. So Bitcoin is not going to be a safe haven, and is really not a long-term investing proposition anyway. Gold is sort of in a bubble too. So gold will retract along with everything else when there's a recession. And I don't know, UBS was talking about a recession in the next year. I don't want to make predictions. It could be in 1 year, it could be 5 years. I think it was John Maynard Keynes, who said, the market can be irrational longer than you can stay solvent, right? So I'm not going to make kind of predictions about that, but I think it's safe to say, within the next, in the midterm at least, in the next 2 to 5 years, there'll be a recession, maybe even sooner. So gold is also in a bubble, and really and I'm not saying, gold, unlike Bitcoin, has a long-term future, but it just is not going to protect you with the recession. Really, the only thing that can be protected, besides just putting money under your mattress, is bonds, honestly. If you find some AAA rated corporate bonds, and like a portfolio of those, and nobody's paying me to say this, but there is a financial platform called public.com, and they offer a bond account that comprises of, like, I believe it's 10 highly credit rated AAA credit rated bond portfolio, and it's paying in the 5 to 5.5% range. I think the latest number I saw on that was like 5.45 at the time they're recording of this video. But again, I'm not being paid by them or anything like that. That's just one example. But there is ability to get exposure to a basket of bonds. I'm not saying go out and buy a corporate bond of any one company. I'm saying, get a basket of them, and then combine that with cash. So I'm not a financial advisor, but it just, like, I did some numbers. So if you have like a high yield cash account, like a money market or CD or public, that company public.com, they're offering a 3.8% high yield cash account. Well, if you have a 3.8% high yield cash account and maybe a 5.4% bond account, then you do some math on that. If you have like 75% allocated into the bond account and 25% allocated into the cash account, because, you always want to have a little bit of cash, because even a well-diversified bond portfolio in a recession, one of those stocks could go under and so forth. So there's still a little bit of risk. It's less, but there's a little bit. But again, put 75% of the portfolio into some well-diversified set of bonds that pay in the 5% ballpark, 5 to 5.5%. And at least 10 of them, something that's well diversified, and then maybe 20-25% of that portfolio into some high yield cash account to kind of spread out that risk. The total value of that portfolio spits out about 5%, right? Now, in a recession situation, I think a couple of things happen. The yields on bonds go up because the price of the bonds are going down, and the companies are trying to attract investors. So those yields will become more attractive, not less, but maybe the yield of the cash account might go down. I mean, there's different factors there, but right now, if you go to public.com and put some money between the high yield and the bond accounts they have, there's no reason you can't get in the 4 to 5% yield. Okay. And that can get you through a recession. It's no exposure whatsoever to equities, no exposure to Bitcoin, no exposure to gold. Some people say U.S. Treasuries too, but I'll be blunt. Donald Trump has made a career out of it, and I guess, more power to him if he can get away with it, of kind of exploiting the loopholes in the laws of the United States to not pay his obligations. This goes back to the late 80s, early 90s. He just has been giving creditors the middle finger his whole life. So what is a treasury? What is a U.S. bond? It's a debt obligation. It's saying if I buy a $100 U.S. Treasury bond, I'm saying I'm lending the government $100, and I expect them to pay me back with coupon payments over whatever the time period is, right? Now, if the owner of the United States government is Donald Trump, that's not a very good bet. So some people are saying, oh, treasuries are the safe haven, and in a recession, avoid the gold, avoid the Bitcoin, and just go to the treasuries. But the treasuries have Donald Trump behind it, and that's no longer a safe haven. So, gold is bubble territory. Bitcoin's a load of baloney or malarkey, to use a Joe Biden word. Treasuries are frankly trusting the government, and I don't trust the government with Donald Trump anymore. Not just because he's a racist, but just because he doesn't bloody well pay his bills. So really, what's left over are cash and bonds. If all cash is fine, but you're not going to make much money that way. All bonds, it's also pretty fine, but there's some risk. So you should balance it out between cash and bonds. Again, 75, 25, 75% in bonds, 25 cash. Everybody's situation is going to be different. I'm not a financial advisor. This is not a financial advice. And public.com was just something that came to my mind as an example. I'm not affiliated with them in any way. So all those disclaimers in there. But if you want to get through a recession, whether that's coming next week or next month or next year, or 5 years from now, pulling back and getting into bonds, and that's certainly with my current 401k, that's what I'm doing. I'm just retrenching into essentially cash and bonds, because equities are just in bubble territory right now. But if somebody's going to come along and tell you, oh, the sky is falling, 2008 recession, so therefore buy Bitcoin, therefore buy gold, that's I have a bridge in Brooklyn to sell those people. So anyway, just wanted to share that. Thank you.